What's going on, everybody? It is February 13th, 2024. Day log episode over NQ and the live stream, also ES today. If you're attendance in the live stream, you're able to see the six sister approach and how I was able to utilize that on ES today. To be honest, it was nothing in comparison to the NQ trade today. If you all, or at least on YouTube and Twitter, you saw my execution video on it. So hope you guys enjoyed that video. I had labeled it something pretty sarcastic. So I was just having fun with today with NQ, but I will review that trade because I think it's exactly what I was talking about. And I couldn't emphasize it enough. And I know for newer people, you can't understand what I was trying to emphasize over this last couple weeks here, especially for newer people. To me, it was difficult maybe to understand what I was trying to highlight. And I hope over this last day or two, you've began to realize what I've been highlighting and what I've been waiting for. And what I'm talking about is in terms of intermarket relationships, them agreeing and having movement on dollar index, having bonds, yields, and now index futures, they're all in sync with the correlation that they're supposed to be in. So we have dollar moving higher, we have bonds moving lower, we have yields moving higher, and we have index futures moving lower. All of those are in sync now. And when you have dollar index moving a lot, it creates a lot of volatility for index futures, and it creates a lot of clarity and transparency for me to read NQ. And then you combine that with higher time frame analysis on NQ, and you look at the S&T chart and you combine that. I mean, it's a beautiful recipe. I know that's a lot to take in, especially for a newer student. But if I had one piece of advice to my younger self, it would have been to look at all of this way years ago. I wish somebody would have sat me down and be like, look, Caleb, you need to look at all of these things that I just annotated, because this is going to help your trading tremendously. Not only is it going to teach you when to enter in the market and when things are high probability, but it's also going to really help you determine when things are low probability and when you should stay out. So I hope put a comment below if you're starting to see what I'm talking about. So look at NQ today. I will cover the ES trade later. Look at the weekly time frame. We had CPI released today. I want to jump out to the monthly. We've gotten above buy side, so I'm curious to see how this monthly closes the candle. If we end up dropping beneath the buy side liquidity here and we close beneath it, that's going to be a beautiful sign for lower prices. I'm not trying to call a top in here. I'm not trying to do that. It's something I'm very weary of. This thing could just expand higher again, even though we've had a large range day today lower. I'm not on the opinion of calling tops and looking for that. I'd rather wait for some type of confirmation, and that would be another couple weeks of bearish closures and breaking underneath this for value gap and treating it as inversion for me to really start calling something where I'm looking for really lower prices. Otherwise, I'm kind of neutral currently, even after today's closure. Because all we did really, if you're just looking at the dealing ranges, remember to pay attention to these and where you're at. Sometimes you can get lost within the day and what happened, and you can move that onto the next day. But if you look at just the dealing range, what do we do here? This is our previous swing low to high. We drop down into a discount into that fair value gap there. So here, this is basic market structure 101. Drop down into a discount, fair value gap, we extend higher, get up buy side. What do? We shift in market structure. We displace higher. What do we do today? We drop down into a discount. Optimal trade entry is 62 and 71. So just looking at basic market structure, that to me is price just dropping down into a discount. So I can't call that this thing's going to immediately reverse just because we've reached above buy side here. It to me, I would need to see clear closure or something to where we're no longer validating bullish PD raised. We're breaking it. We're moving off lower and wanting to attack the low in here and closing beneath it. That to me is where I'll be like, all right, guys, we're really, really bearish. Everything, the narrative is still bearish. To me, intermarket relationships point to lower prices. But this is where, when I'm looking at narrative, I'm looking at just basic market structure on IQ, is still points to higher prices. So I have to be weary of that. I can't, just assume. Things can change on a dime. Things can change in real time, just like that. So you have to be weary of it. I'm trying to annotate in here where we're really reaching down into. Maybe on lower time frames, this would be a breaker. I'm gonna have to check. But this up close candle in here would potentially be a breaker on lower time frames. So keep that in the back of your mind going into tomorrow. Beautifully delivered into the sell side liquidity, the relative equal lows. Go back to the live stream today. What was I annotating for the overall objective for today? 17,555. All recorded, no hindsight. This was predicted in real time. So even moving into the PM session, since I wasn't live streaming, you still could have utilized that knowledge. You could clearly see that we were dropping off lower. I was willing to stand on one side today just to go short, but the PM or the AM session was just not willing to deliver the drop lower. So I elected to trade ES and take a long, and I was able to profit in it. But overall, I wish I was able to just showcase the shorts, to be honest with you, because that's really what I was keying off of today. And that's the way you're able to trade both sides in this market. But preferably, I teach the way where you should stay on one side. You should stay on the narrative and where the drawn liquidity is, because that's a magnet. Price is going to draw to it. Even if price moved higher today, like that retracement, you just sat idle, you didn't do anything, and you just looked for shorts, because that way you're protecting yourself, you're staying on side with narrative, and it was super easy. Dropping down into the 1 hour. I'm sorry, I annotated these, but these are both inversions, right? Look how we closed here, and look at this 4-hour candle. Retraced right up into this inversion, dropped lower, look at the bodily closures, and then we dropped off into the sell side beautifully. So this is a reclaimed BISFI in here that we reacted off of after taking the sell side. This is kind of the breaker I'm talking about. We have a low, a high, a lower low, and then we eventually have the higher high. So we drop down into there. We have going into tomorrow, at least on the 4-hour, I mean, those inversions, I would rather, if we're going to maintain lower prices, if we do, prefer this to stay open. I suspect tomorrow could possibly be a consolidational day. After large range days, you can expect or anticipate small range days consolidation / seek and destroy. Not that it's guaranteed, but something like that could possibly play out tomorrow. And you have to be aware of the profile, especially with CPI. When you have those type of news event drivers and price moves a lot, you have to be aware of the next day possibly being range bound. So beautifully delivered. Let's go over here. Let's look at just simply this reclaimed, this BISI over here that was reclaimed, extend it out to your right. What do you know? Oh, there isn't an algorithm. Oh, really? I'm sorry, I'm sounding braggadocious, but it just amazes me, man. I mean, it amazes me with these concepts and the precision. I mean, look at the CE, the 50% level. Look at the respect. It's beautiful. I can't get enough of it. Even somebody with 6 years of experience and 4 years with ICT, I mean, I'm still amazed by these concepts and the accuracy of them. We retraced up into this 1 hour inefficiency here, and then we sold off. So I was unable to really get that high point here. I was actually longing ES while this thing was up here. So it was fine. By the time I came back to the PM session, I was able to capture the short, and I'll cover that. But in hindsight, obviously, I would love to grab something like this up here at that high premium. So from this dealing range high down to that low, just simple basic market structure. We're making lower lows and lower highs. What do? We retrace right up into optimal trade entry. This is our inefficiency here, that large SIBI. And then we trade off lower. I'll cover the short in here. Let's look at a 5-minute time frame. If you take just this 5-minute inefficiency here, and then you just look at the CE level of it, so the 50% equilibrium. So from that high down to the low, extend out the 50%, basically gets met a little bit above it. If I go into 1 minute, you'll be able to see it. But this is where, to me, a lot of people probably would have seen this large displacement, and this is where narrative comes into point and play. and why I make a huge emphasis on it, because somebody could have saw this if you reeled this back. Let me know in your comments below if you went long today on this or something. There's no shame, but it's a great teaching purpose. Somebody could have seen this huge displacement higher, seen a fair value gap, and they're trying to go long in here. But what's the narrative? The narrative is going to overseed any offside PD array because it's not in line with the narrative. And how do I know the narrative is looking at higher time frame context, looking at intermarket relationships, looking at where the draw on liquidity is? That's what I'm trying to teach all of you, because it supersedes everything else. Any entry model, any pattern is going to be overridden by the narrative, because that is what is the whole, every single lower time frame is going to submit to it. It's going to bend the knee to the higher time frames. So to me, being in line with that is crucial. And it makes trading so easy. You don't have to worry. You're staying on one side. You're electing to only trade that one side. If you become more advanced and a little bit more experienced, you could trade both sides because you're fitting within the narrative. I was talking about today that ES, I was willing to long it because I was in full understanding that this was simply just the retracement before we dropped lower. I didn't capture NQ because I didn't find it very high probability at that time, nor was really any entry pattern for me that valid. But ES seemed a little bit more valid for me to take it. The risk was there and the time was there. But in terms of NQ, I wasn't willing to do it. In hindsight, I really wish I just shorted this at the top here and just showed you all what being on side with the narrative was. So in here, you can see we trade right through it. Why? Because the narrative is bearish. Well, I'm not going to be trading a bullish PD array when the narrative is bearish. So we slice right through that. We treat it as inversion. We drop off lower. Everything for the left side is going to be extended out to the right and utilized as a bearish PD array. So this becomes inversion. The lower one here becomes inversion. Anything inside of that, like this inefficiency here that got formed, is a great confluence, right? You have two things stacked on top of each other. I love inversions when there's a fair value gap residing in the same area as the inversion. What do you know? We fade off away from it. Why? Because the narrative is bearish. Anytime you're on side with the narrative, it's low resistance liquidity run. It's easy trading. It's super easy. It's dumb easy. So this is what I've been describing to all of you. If you haven't been around a long time and you don't understand what easy trading is like, I'm trying to showcase that all for you and what that really means. So in here, I'm gonna have to take this off, but this is where I ended up going short. If you look at the execution video, yes, I took this on my live account, but I did it on paper trading so you all could see it. But I shorted in here, even though I'm shorting at that fair value gap. I don't know if it's going to just reach up into the 25%, 50% CE and then drop off. We had this closure up here. Where was my stop loss? I made an annotation of that. My stop loss is going above this high. Why? Because any fair value gap that you enter off of, you're putting your stop loss on the second candle that creates the fair value gap. These three candles create the FEG. This one, and that one. My stop loss goes above the second one. Not this fair value gap there, because guess what? The wicks do the damage, the bodies tell the story. If my stop loss was here, I would have been stopped out. My stop loss went here. So you have to pay attention to rules in your management when it comes to stop losses. And I even showcased that today with ES, being very particular with my stop loss. So prices trading up into that. If the entire narrative and the institutional order flow is bearish, everything in terms of intermarket relationships, dollars trading higher, the draw on liquidity is down here on NQ, it's easy, like butter trading. And if I did this, and I went over to the 15-minute time frame on ES or NQ, still have some annotations. There was a 15-minute inefficiency here as well. So I'm not utilizing the 1 minute in this instance. I'm using a 15-minute time frame for value gap and a 15-minute as my framework. It's the same thing as if you're utilizing it on a 1 minute. My risk is just a little bit larger. So we trade off lower in here. I'm taking out, I actually, during the video, I didn't catch it. This didn't happen on my live account, but with paper trading, I set a sell limit instead of a buy limit, and it triggered me 3 more contracts in here when I was supposed to take off 3 contracts. So that was a mistake, and you guys saw that in the execution. Just fine. It's just a demonstration. But hopefully you got the point there, whereas I'm supposed to be taking off 3 contracts at the sell side here, and then 2 at the sell side in here. So trade up into it. I was looking at the stop loss, the way we were closing, 15-minute looked beautiful. The way we closed underneath the CE, and then we just dropped off smooth like butter. If you guys have been studious of me, what is this entry pattern of mine? I've talked about it. It's the last 25% of the move into the draw on liquidity. It's the easiest entry pattern model you could possibly have. You see how to the draw on liquidity, we're basically about 75% there, if not 90%. And then up here, that gives me a little bit more room to short, because the whole thing is basically complete. I'm just looking for that last little bit low-hanging fruit. We drop off, and in total, I mean, this thing to here, that's 46 handles all the way down to the draw on liquidity. That's 73 handles. I don't need to catch this entire move. Would have that been fantastic to catch the high and catch 200 handles a day? Great, that would have been awesome. But I'm perfectly happy with 40 handles and then 70 handles as a partial. That's more than enough to pay the bills and do exactly what I need in life. I don't need any more than that. I can also replicate that every single day if I wanted to. Not that I'm going to, but it can be replicated. So that was the NQ trade. I hope that answers some questions in terms of narrative and being on side with everything else. I mean, it was a beautiful example today of it, and you're going to see how easy it is when things are on side. It's just smooth, easy butter trading. I mean, into that sell side in here, look at the 1 minute. I don't think there was a singular up close candle. I mean, it was so easy to just stay in the trade because there was nothing against me. It just smoothed all the way into the draw on liquidity until we got underneath the sell side here. Then we started to have a little bit of, consolidation retracement. But even then, I mean, that's something so easy to stay in the trade rather than consolidational and just moving back and forth with no direction. Last but not least, I'm going to cover ES in here in the trade that I took if you were a part of the live stream. This was me utilizing the Six Sister approach, where ES already retraced higher into its premium. So I'm expecting ES to at least have a higher retracement alongside NQ before making the drop lower. So I was utilizing this inversion and the fair value gap that was within it. So there's one here. And what is this move again? What am I doing here? What's the common theme that I'm usually entering off of? The last 25% of the move into the draw on liquidity. So I had that buy side as the draw on liquidity. I had this inefficiency here. Why this one? Because there's no other ones, right? There's nothing above the buy side besides this inefficiency and the one higher above it. So I'm going to utilize that as a draw on liquidity. So we have this one here. Then we had this old new week opening gap plus this fair value gap here. So my stop loss went beneath the old new week opening gap and underneath this fair value gap, because technically that's 4 bullish PD rays. Fair value gap here, inversion, old new week opening gap, and another fair value gap. If it dropped beneath that, then basically the trade idea was invalid, and that's all I could do. And you could see that I took a little bit of drawdown in it. We had to sit through a bunch of chop, went into drawdown, and then we rose above it, utilized the civvy, became inversion, displaced off higher, and then I had just a contract kind of just holding out. I moved it in to profit, but I took the majority of the position off here. And to me, this is nothing in comparison to the NQ trade. The NQ trade was a monster trade. It was beautiful. This is just a little 5-handle run. It's really nothing, but still a showcase of being able to get in the market and get what you need. 5 handles a day is more than enough. You can build a huge career off of that. So hopefully you guys enjoyed today. It was a lot. I can't encapsulate everything inside of a daily log. I mean, I would have to sit here for a long time to do that. But hope you guys have been enjoying the live streams. It's been great. Appreciate all the new support. And that's going to be it for today's video. So until tomorrow, I'll be live streaming 15 minutes before the open. Good luck and good trading, everybody.